South Africa's consumer price inflation has risen to levels last seen between 2016 and 2017. According to the latest figures by Statistics South Africa, CPI now stands at 5.9%.
The data for the month of December follows a 5.5% increase in November. Our business reporter Tumisang Ndlovu has more.
Statistics South Africa says the current data represents a trend fueled by hikes in petrol, food and municipal services. Stats SA's Patrick Kelly further indicates that the rise in global inflation is also a contributing factor.
The increase really follows similar trends to what we have observed over the last number of months. So annual inflation at the moment is being driven by primarily increases in the fuel price, as well as in some of the food categories. Within food, particularly meat products and oils and fats. So those are really the two main categories that are pushing on the upside, particularly on a month-to-month basis.
The rising cost of food in relation to the CPI data is also a concern. Investec economist Annabel Bishop explains that the situation is likely to remain amid high oil prices.
Of course, given the very high oil price, one of the reasons why the inflation rate has gone up so much last year is because of high oil prices that have been pushing up fuel prices. You recall the fuel price hikes that we've had. And worryingly, February might see a R1.30 petrol price increase as well. Now, we can do nothing about that because obviously we import oil. So again, very difficult. And of course, the oil price, as you know, is in dollars, but we obviously import it, so we have to pay rands for it and exchange those into dollars. So if we see rand depreciation, that also pushes up fuel prices.
The CPI figure, which is one of the tools used by the Reserve Bank in its inflation monitoring, also comes just over a month after the central bank hiked the interest rate for the first time last year by 25 basis points to 3.75%. Economist at Nedbank Isaac Matsego shares his views on how the Reserve Bank is expected to react.
The normalization of global interest rates will definitely put pressure on the South African Reserve Bank to keep up with the trend in global monetary policy, not to be left behind the proverbial curve. So definitely, the SARB is in hiking mode. It's all a question of at what pace will they be hiking.
The Reserve Bank's Monetary Policy Committee will be meeting next week, and analysts say they are faced with the difficult choice between taming price growth and supporting a sluggish economy. That's as inflation is now near the central bank's upper end of its target range, which is between 3 to 6%. For Newzroom Afrika on Channel 405, I'm Tumisang Ndlovu in Johannesburg.